Joining me now is Stanley, chief economist at Amherst Pierpont. Boy, I wonder with that kind of introduction whether you sometimes feel like a voice crying in the wilderness right now, Stephen.
Yeah, I have to admit I didn't realize just how low some of the other forecasts had gotten. But, I'm still pretty optimistic about the third quarter.
All right, well, tell me what you're looking at that makes you have such a rosy outlook.
Sure. Well, I would point to a few things. I mean, firstly, as you mentioned, the consumer, I think this summer was the first time that people have really been able to get out there and do the sorts of things that were restricted during the pandemic. So we know that travel was kind of crazy over the summer, all the crowded airports and things like that. So I think there's a lot of services spending that we'll see in the third quarter. A second thing that we're seeing, I think, is the unwinding of some of the snafus in the trade situation. So the first half of the year, goods imports spiked. And I think what that was it was the kind of all the stuff that had been ordered in 2020 and 2021 that didn't get delivered. As some of the logistics problems were unwound, I think those came in the first half of 2022. And so the trade deficit widened dramatically in the first half of the year, particularly in the first quarter. It was really the main reason why we saw such a negative GDP number in the first quarter. It looks like that's reversed. Imports are getting back to something close to normal in terms of levels. And that means that trade is probably going to be a big boost to growth in the third quarter, maybe as much as 2 percentage points. And then finally, another big drag has been the government sector. It's been very negative in the first half of the year. It just feels like the government sector should begin to turn around. I think the federal government is going to be spending a little more on defense spending, given what's going on in Ukraine. State and local governments should start to see more activity around the infrastructure bill that was passed last year. So, all three of those things combined, and I end up with a GDP forecast above 3%.
How do you collate what we heard, for instance, from FedEx, what we even heard from General Electric about supply chain snags still disrupting their delivery to customers? How does that coincide with the way you think the strength of the American consumer is going?
Yeah, we're still definitely not back to normal in terms of the supply chains, and so that's going to be an ongoing issue. It is getting better, it feels like, but it's certainly not all the way back to where we'd like it to be. I think in terms of the consumer, it's important to remember that we're seeing a kind of a reversion to mean, if you will, in consumer preferences. So during the pandemic, a lot of services were not available to consumers, and so they concentrated on goods, and that's been a well-documented conversation. And I think we've seen kind of the reversal of that. And so I think FedEx is certainly one element of that. As people are a little bit less interested in goods and maybe more interested in services going forward, there's definitely a shift in the composition. It doesn't necessarily mean that the consumer is weakening dramatically, but merely that the composition is returning to something closer to the pre-pandemic norm.
But we are starting to see an awful lot of CEOs talking about slowdowns in their business. FedEx just last night, we're going to hear from a containerboard CEO shortly here. Interest rates seem to be going up rather dramatically. Housing seems to be coming off the boil. There are an awful lot of things that are countervailing influences to what you describe.
Sure, absolutely. And I would just add, I'm pretty negative on housing in the near term too. I think you're going to see a big drop in housing activity in the third quarter, just as we did in the second. So I'm certainly not ignoring that. I think, in terms of the FedEx thing too, I would point out a couple of things I'd point out about that. Firstly, FedEx is a global company, and I think there's no question that Europe and some other parts of the world are probably dealing with more acute downward pressure to their economies right now than the U.S. might be. And the second point is that, hey, look, the Fed is trying to slow things down. We had extraordinarily strong growth. The economy was overheating last year. And so this is all part of the process of trying to moderate things and bring the economy into better balance.
Shepard Smith here. Thanks for watching CNBC on YouTube.